We are at an absolutely critical moment for Bitcoin. The data is showing two massive financial forces just locked in this high-stakes standoff. And believe me, a major move is coming.
$34.79 million. Let that sink in. That is the amount of leveraged money that's on the verge of being wiped out right now. The stakes, they couldn't be higher.
And right here, you can see exactly where that money is sitting. We're looking at a massive wall of leverage building up on both sides of Bitcoin's current price. This is a classic signal that things are about to get very, very explosive.
But here's the thing. The data reveals this huge contradiction. You have two incredibly powerful forces pulling the price in completely opposite directions. It's a fascinating tug-of-war, and we're going to break down exactly what that means.
All right, first up, let's look at the bullish case. This nearly $35 million short squeeze magnet sitting right above us.
Look really closely at this bright yellow band right here. This represents a super dense cluster of short liquidations, all packed between $92,500 and $93,000. That is a huge pool of trapped short sellers. If you're finding this breakdown valuable, do me a favor and drop a like and share.
Now, for anyone who's not totally sure, what is a short squeeze? Well, it's when a rising price forces all those people betting against it, the short sellers, to panic and buy back in to limit their losses. And what does that do? It just pushes the price even higher, even faster. This liquidation cluster is basically perfect rocket fuel for that exact scenario.
And this is absolutely crucial. These pools of money act like magnets for the price. The big players in the market, the market makers, they can see this liquidity. This gives them a massive incentive to push the price right up to these levels, trigger that cascade, and profit from all that chaos.
But it's never that simple in these markets. There is a powerful opposing force at play, the long liquidation trap. And if you want more data-driven insights like this, make sure you subscribe to the YouTube channel.
So, check this out. This shows the other side of the battle perfectly. Just below the current price, there's another huge pool of liquidations building up, right around that $90,000 level. This is a major danger zone for anyone who's betting on the price to go up. So, this really sums up the entire conflict. On one hand, you've got the upside catalyst, a potential short squeeze at 92.5. On the other, the downside risk, a cascade of long liquidations below 90K. And the market, it's caught smack dab in the middle of this whole thing.
A setup like this is a classic volatility catalyst. Seriously, think of it like a compressed spring, just ready to uncoil violently in one direction or the other. For real-time updates on this, follow us on Twitter.
The reason the price has been so quiet, trading in such a tight range, it's a direct result of these two opposing financial forces creating this fragile balance. It's holding the market still, but just for now.
And that brings us to the ultimate question this whole data set is screaming at us. Which level is going to break first? The answer to that is going to decide the market's next big move.
Okay, so let's pull all of this together into a few clear strategic takeaways that you can actually use.
So here's the crucial points. 1. The price is trapped. 2. A break of either 90K or 92.5 is probably going to trigger a really fast move. 3. We should all be ready for some serious volatility. And 4. These two levels are the battlegrounds. They're what you need to be watching. If this is helping you see the market clearer, drop a like.
Look, the bottom line is this. In a market structure that is wound this tightly, being neutral is only a temporary state. A resolution, a big move, isn't just likely, it's pretty much inevitable.
So I'm going to leave you with this one question. With nearly $35 million of leverage on the line, where do you think the price is headed next? Let me know, subscribe, and drop a like below. Follow us on X for more updates, and I'll see you in the next one.